The S&P 500 was up again in today's trading session, up 0.21%, closing at 68.4661. We're back in positive gamma exposure territory, getting above the zero gamma exposure level the last couple of trading sessions, which is currently sitting at the 6,800 strike. The 7,000 strike continues to be the focus for a year-end potential target, and the bounce that we saw during Friday's trading session off of that 6,650 zone has proved to be a solid support zone with buyers coming back in full force. So this is the level that we want to pay attention to, in the coming days. In the case that we see any kind of consolidation or gap fill around the 6,750 level, we want to make sure that these previous lows around the 6,625 to 6,650 zone hold. But as long as that remains the case, we do think a move higher is coming in the next few weeks. Another point we brought up in last night's video actually is getting back above the 50 EMA on the 15-minute chart. We use this a lot of times to determine short-term intraday trends. And of course, with Monday's trading activity getting back above that line as well as back above the zero gamma exposure level, that gives us additional confidence that bullish momentum is back in the market. One note, however, is we are entering our upper dealer cluster zone. This is between 6850 and 6950, and this is an area where previously we saw dealer selling pressure kick in. This was also combined with the most recent FOMC announcement. And so we could see some consolidation in this zone as dealer selling pressure does increase above the 6,900 level. So that's something to pay attention to. It doesn't necessarily imply a big drop or anything. It just introduces additional selling into the market. And so that could pause the rally just slightly here as we approach the 6,900 level. But ultimately, we think a move up to 7,000 is still in play.
Thanks, Anthony. Our viewers know yesterday we brought up a QQQ intraday trade that we took. Well, today we actually took a intraday trade using our 0 DTE GEX picture on IWM, and I expressed this trade using RTY. So those are the Russell 2000 futures. And basically, when I made this post, we just highlighted that we had flipped from negative to positive GEX, and that we saw this large GEX cluster at 245. I think at the time we were around 243.5. So let's take a look at our GEX levels chart and take a look at what actually happened. We saw GEX flow improve into 245. You can see as time moved on, we saw 245 become the largest GEX cluster. And then right around noon Eastern time, we placed that trade. So you can see almost immediately price started working its way higher, and it eventually did reach that 245 area before fading. So we captured a $900 profit on this move up thanks to that advanced notice from the 0 DTE GEX on IWM.
Thanks, Sean. Next, let's take a look at Bitcoin. Bitcoin is actually down on the day 2.64%, currently trading around 103,000 and change. We saw buyers step in last week as Bitcoin dipped below the $100,000 level, and that's actually been an area that's been a major pivot zone going back to last April. Gamma exposure is concentrated mostly between the 100 and the 110,000 strike currently, and over the last couple of weeks we've really seen the positive gamma exposure at 120 and 130,000 diminish quite a bit. So the picture has shifted a lot over the last couple of weeks in Bitcoin, and we just wanted to point that out as a potential red flag heading into 2026. Now, the fact that we don't have much negative GEX below 100,000 currently is a good sign. Not too much bearish momentum, at least in the options market on Bitcoin, and the fact that buyers did step in last week, both of those are positive signs. But the overall arching technical picture is a big rolling over, as we see here on the chart. We're below the 50-day EMA, which is this red line. We're trading right around the zero gamma exposure level, and so this is kind of a precarious zone, coupled with the fact that we're seeing diminishing positive gamma exposure. So I'm expecting some consolidation around this level. I think it's going to take some time for Bitcoin to really get back on its feet. We would probably need to see multi-week or maybe even multi-month consolidation around the 100 to 115,000 strikes. And so while we're not seeing a huge risk yet, we do want to see these lows hold just below 100,000, making sure that buyers are stepping in here if we do see another dip down to these levels. But I think a further consolidation around this zone could give Bitcoin and crypto in general another chance to make a leg higher in the coming months. But the current picture, unfortunately, is looking more neutral to slightly negative than what we were seeing just a couple of weeks ago.
Thanks, Anthony. From my view, I think QQQ is actually looking the least bullish of the major indices. But one thing that did catch my attention is that yesterday we saw a large increase in GEX back into positive territory. But today we saw a more modest decrease, but it was back into negative territory for QQQ. So there's a battle going on here. We still have this very large gap back to Friday's reversal. And we did see price close a little bit below the 621.79 whole moving average, this declining yellow line here. So, I'd prefer to see the line flatten and then turn up, which would follow price, of course. So we need to see some price action for QQQ consolidate. I would not be surprised to see some sort of a push slightly higher, maybe to 625 or even 630, and then eventually closing this gap back toward the 610 area. And really, bears can't start to get excited until we lose 600 and close below that. So that's the way that I view it. I agree with what you said earlier, that 7,000 SPX is still a solid target, and we'll just try to navigate that pathway along the way.
Next, let's take a look at Palantir. Palantir saw an inside trading day today after the previous two trading sessions saw a really big upswing. Palantir down 1.37%, closing at 190.96. As we mentioned in Sunday's video, Palantir during Friday's trading session finding support in the mid 170s. That's actually our lower dealer cluster zone, and it's also just below the 50-day EMA. And you can see just how many times here buyers had stepped in right around that 175 level, and that was the case again on Friday. And so we actually took that opportunity as buyers were coming in to Palantir to take a long position. And you can see on Friday afternoon, we actually added the November 21st Palantir 180-190 call debit spreads at $2.87. You can see on our post, we actually noted our rationale, positive gamma exposure at the 200 strike, even after the big dip that we saw in Palantir, with options volume and gamma exposure both signaling potential upside to the 200 strike. We thought that was a really good risk reward trade. And of course, fast forward to today, we were able to take that in as Palantir was trading above the 190 level. So we locked in $726 profit on that trade within just a short couple of trading sessions. We actually also took the opportunity to roll the position out to the 195 200 call debit spreads at $1.75. And again, the setup's looking even better than it was on Friday, with positive gamma exposure growing at this 200 strike. We're not seeing a whole lot of gamma exposure above that level, although I think it is possible for Palantir to overshoot potentially and make new all-time highs, maybe up to the 205 strike, 210, somewhere in there. We'll keep an eye out on that, but 200 is our first and immediate target here heading into the next couple of weeks. And by the way, you can track our trades in real time as we manage our options portfolio by becoming a member at geeksoffinance.com. And for a limited time, we are running a special promotion. You can get an additional $300 off our yearly portfolio manager tier subscription. Use code FALL2025 at checkout. We do have a few spots available, but this promotion is going to be ending very soon, so definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. There's a ton of great traders in there sharing their own trade setups and strategies. And as I mentioned earlier, you can also track our trades in real time as well. I'll put links in the description below to all of that so you guys can check it out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.